Oh, hello and welcome. Very strong day in the market today, led by technology. Nasdaq was up 1.76%, S&P 500 up 0.93, Dow and Russell 2000 they were also up. So you're looking at a heat map of S&P 500 right here and the sectors. You can see that of the sectors, the growth sectors are clearly pushing S&P 500 higher. Communication, technology, and discretionary. These have been the leaders so far this year. But what we are seeing is that we're seeing improvement in industrials. So this is important for not just for S&P 500. This is the fourth highest, heaviest weighted sector in S&P 500. So, improvement in XLI is going to put upward pressure in S&P 500, but it also plays an important role in Dow and Russell 2000. So improvement in this sector definitely should help out Dow and Russell 2000. All the other sectors you can see kind of still underperforming at the moment. I'm watching the two biggest sectors, the healthcare XLV and financial XLF. I want to see whether or not if there is any improvement in these two sectors. Together, these two sectors represent over 30% of S&P 500. If these two sectors start to perform well, that should put further upside pressure on S&P 500. Now, obviously, S&P 500 had a very strong day. This is SPY. You can see SPY has now taken out this high right here from August. This was a big resistance zone, and there was a big decline after that. It was kind of surprising that market rallied so sharply ahead of tomorrow's CPI report and Wednesday's FOMC meeting. So let's quickly have a look at what the market is expecting from CPI point of view. So in terms of CPI, market is expecting CPI for the month of May to come in at 4.1%, which would be down from 4.9% from the previous month. Now, if it came in at this number, that would be a big drop from 4.9 to 4.1%. Now, even if it comes in a little bit higher than this, let's say 4.2 or 4.3, that would still be a big drop from 4.9 to 4.3. So if that's the case, then I'm not sure if the market is gonna react, that much negatively. 4.1. I mean, I don't see how the market, falls a lot. Maybe it can pull back a little bit, but I don't see how it falls because the inflation is clearly moving lower. If you look at the trend, CPI trend, you can clearly see. If you look at the trend, you can clearly see that since reaching 9.1, it's been moving lower. And 4.1 would be a big drop, from the previous month. And this is for the month of May. At this rate, by the time the June CPI comes in, CPI could have a 3 handle. And by the end of this year, CPI could have a 2 handle. So I don't see how this is negative for the market. Now, if we look at the core is expected to come down a little bit from 5.5% to 5.3%. So it's a modest improvement, not a significant one. But if you look at it over the last few months, the core basically remained kind of stuck. 5.7, 5.6, 5.5, 5.6, 5.5. So if it comes in at 5.3, it would be basically breaking this, range to the downside. You might say this is also a positive. Now, on a month-over-month basis, the core is not expected to change. So 0.4 is expected to remain unchanged. But if I look at the CPI of 4.1, to me, that looks like a big drop. And if CPI comes in at 4.1, I'm not sure the Federal Reserve increases interest rate on Wednesday. They look at this number and say, wait a minute, because at 4.1, headline CPI would be over 1% below the Fed funds rate, which is at 5.25%. So at 4.1% CPI, I think there will be pressure on Federal Reserve to kind of pause. And if this trend continues towards the end of the year, as I said, CPI is likely to have a two handle. So I'm not sure whether the Federal Reserve continues to increase interest rates. So it'll be interesting to see what happens on Wednesday. But I think there will be pressure on the Federal Reserve to pause. And I think at 4.1% inflation, I don't see how the market falls in a big way. Yes, we could have some profit taking, but I don't see a 10% drop in the market. I'd be surprised even if there is a 7 or 8% drop, in S&P 500 if CPI comes in at this level. Anyway, that's CPI. So let's come back to SPY. So here's the SPY. So the next level to watch is this level right here, which is around 436. Because there was, it broke down below this level, and then we see this big drop. So this would be the next level I'm watching, and after that it would be this level. So obviously 231 is in the books. Now in terms of support, I'm looking at the moving averages just to see where the prices are in relation to the moving average. Now obviously the price is beginning to move away from the moving averages. You can see the 20 EMA is right here, which is around 418. So you can see that the 20 EMA did provide support during this time. So at some point I would expect price to basically pull back towards the 20-day moving average. So even if it were to pull back to the 20-day moving average, I don't think this is necessarily a bad thing. I would say that this would be quite healthy, because even if you look at the structure, the structure of higher lows will still remain intact. And then if it does that and then does something like this, I think this would be healthy. I don't see anything wrong with this, because what would scare me is parabolic rise like this way. What I would like to see is some kind of a pullback and then rally. And in terms of the structure, this series of higher lows remains intact. So those would be the levels I'd be watching on SPY. And in terms of QQQ, you can also see the QQQ, that's the next area I'm watching, which is around 362. And then 371 would be this level. It's entirely possible, but again, you can see that on a short-term basis, it started to move away from the 20 EMA. You can see that that it touched the 20 and 50 EMAs previously. So a pullback like this way and then something like this, is that necessarily a bad thing? I don't think so. You can see that the series of daily higher lows will remain intact, but momentum is very strong. So I'm also not saying that we should be shorting this market, because this is just too strong a market. But it is overbought. Sometimes it can remain overbought from an extended period of time. But we've got CPI, we've got Fed meeting, so there could be some volatility. Even if there's some pullback, those would be some of the levels to look out for. But I don't see, based on the CPI, I don't see a significant drop in the market. So that's my view. In terms of individual stocks, so there's some stocks that I'm watching. So let's have a look at some of those stocks. First one is Airbnb. So let me just get rid of some of these so you can see. Airbnb is in the discretionary sector. So this sector is seeing some positive momentum. You can see that it's gradually moving higher. So this is the next area of resistance. If it can take out this level, then this would be the next target. So this level is around 120, 128. So if this level gets taken out, then I would be looking for a move to this level. But overall, I like the structure. It's been making higher highs. You can see the momentum indicators are moving higher. So this is a stock I'm watching. Another one I'm watching is Vertex, VRTX. This is in the healthcare space. Although this sector is out of favor, but I like the fact that it's forming this double bottom pattern. It's now closed above this previous high. And you can see that RSI has moved back above the 50 level. So I'm watching this for further gain to the upside. Another one I'm watching is Goldman Sachs. I know that the financials are not in favor, but within the financial sector, this stock is beginning to look better. You can see that it's consolidated in this range for a while, and then it has broken out of this range. It has retested this breakout level, and then it's moving higher. So maybe it can, this would be the next level to target. As long as the market doesn't have a negative reaction to CPI. So I would also be looking at Goldman Sachs. Another stock in the financial which is also looking interesting is Morgan Stanley. So you can see that it traded inside this range, and then it's also moved out of the range. You can see that momentum indicators are improving. Another sector I like a lot is semiconductors, and within that sector, Broadcom. Obviously it had a big move and then consolidation, and now it's breaking out of this bull flag consolidation, you could say. This is obviously it had a big move, so it's quite risky. But I think as long as the market moves higher, I think this can rally more. Also in semiconductor space, another stock I like is Teradyne. So you can see that Teradyne, it's now taken out this level. It also closed above this level. So this would be the next level to target. And if it's able to take out this level 111, then it's got some room to run. So if you look at the, then you can see that, the next level might not be up to right here around 127. So this is also a stock that's looking interesting to me. So I'll leave it at that. We'll see what happens tomorrow. I'll come back with another update, and if I see any trading opportunities, I'll come back with another video. So please consider subscribing if you haven't done so, sharing and liking. Thank you very much.